Let's kick things off. This is the Kingscrowd podcast. My name is Brian Belley, your host from Kingscrowd. I am joined by industry insider Scott Kitun. This week, we are going to be doing a rapid fire segment, just going through a couple things happening in the news. And then we really want to dive into a discussion that Scott had over the last week with Digital Offerings Mark Elenowitz. This is going to be teasing one of the upcoming sessions at Investment Crowdfunding Week. Now, what is Investment Crowdfunding Week? ICW25 Investment Crowdfunding Week is an event that we are hosting. Kingscrowd is putting on from September 29th to October 2nd. It's going to be an amazing event where we're bringing together founders, entrepreneurs, the investors, the funding platforms. There's going to be pitches from over 40 different companies, lots of the top platforms attending, and it's really going to be having a bunch of really engaging sessions, sharing a lot of knowledge just in terms of what's happening with investing, with capital raising, and everything in between. Now, before we jump into the Investment Crowdfunding Week, and I will just plug if anyone wants to sign up for that, if you haven't already, head to kingscrowd.com/ICW25. But a couple things in the news over the last week or two since we were last here. First thing, so we've spoken in the past that the token offerings being done by Republic, the mirror tokens, were something that they've been teasing over the past couple months now, or weeks, coming up on months, and they launched the first token. So the SpaceX token is live. Now, it's being done under a 506c offering, which means it is accredited only at this time. But it basically is letting anyone get access to SpaceX shares, the SpaceX company, for as little as $50, which is a pretty unique way that they're doing that. Again, you're not really getting real equity in it. Reference one of our past discussions on that, but it's a step in the direction of getting retail investors into more offerings. Now, they have a whole bunch of other ones as well. They have, OpenAI, Anthropic, a bunch of other things. There's no involvement of the actual companies in those, but it's basically Republic X acting as the counterparty, making that available to investors. I will also just mention on the tokenized front, we're seeing and hearing a lot in the news about tokenized offerings. Just a couple days ago, Nasdaq. So I think a lot of people are very familiar with large public exchange. It's a company that actually does a lot of other stuff just besides the exchange. But Nasdaq announced that they are seeking basically approval. They submitted to the SEC to be able to trade tokenized securities. So we're hearing a lot about this tokenization. Scott, any quick takes just in terms of some different trends that we're seeing there?
Yeah, I mean, there's another company that recently raised a decent amount of money that was featured on Kingscrowd in the past couple months that is about to announce a secondary that's also approved by the SEC. It also is in the token space. Won't say names, but you can figure it out. It is becoming, there's a bunch of articles on this. A lot of money is being thrown at the token infrastructure and the securitized token, and that goes all the way up to the BlackRocks, the securitize, all the things we've talked about for a long time. What has not changed yet, though, is that all those asset providers they're only contributing assets. They're not trading them. They're not doing anything with it yet. So, while this is exciting, and I do think it's a step in the right direction, and when I say right, I mean for the careers that we both want to have. I don't know if it's the right direction for everybody in the future, but it is trending. Where we've all kind of predicted it will go. But we are not at a point yet where I'm getting super excited and going nuts because I haven't actually seen tokenized assets traded and value equivalencies. You got to see that first, and then we'll be like, hey, they're doing a hell of a job promoting it, marketing it, and talking about it and building the rails and making use cases for things like Polygon and Avalanche and Solana and all that kind of stuff. Haven't actually seen the markets move with it yet. So that will be it could be the most invested and approved thing that is all approved to trade, but then no trading takes place. So that's is yet to see. And yeah, just, with regard to Republic and what they're doing, I think we've talked about it a bunch. We don't need to rehash it, but I think that because of who they're invested in and who's invested in Republic, unlike a lot of the other people who are in this kind of space and what I'll call the SPV lasagna business, they're actually uniquely situated to do this because they have a direct relationship with where SpaceX is. Valor is their investor. Valor is the lead investor for SpaceX. They have the ability to do it. So I would shy on the side of trusting that they're going about it in a way that will actually enable you to invest in these large late stage stuff, and probably a better opportunity there than some random person who's selling you a triple wrapped SPV. That's just my take. Obviously, very biased Republican investor here, but I'm just saying.
Yep. Now, there's just, I think it's overall a trend we're seeing in lots of different places. As we mentioned, every week in the news, more announcements about private opportunities being brought to retail, and just more news since then. So I will be very curious. Go.
I just want to add, you're talking about more news. There was news just 2 days ago. I mean, we've talked about iCapital on here before. iCapital's raised somewhere in the vicinity of $750 million over the past 9 months, 6 months, all pursuing retail investors for private equity funds. They just announced yesterday or the day before, and I'm hope I'm not misquoting this, but I'll say 50 million. It's some number like that. $50 million investment into tangible markets, which they previously, I believe, seeded it. But tangible markets is a secondary platform for LPs and GPs to get liquidity in private equity funds. So if you were to just like take a step back, if you're a retail investor and you've heard all this news and information about the ability to invest through retirement accounts in the near future, and you've got your RIA and you've got your registered agent who's managing your money, these things are all going to be pushed on you, right? And we've talked about this a couple episodes ago. What has been the big question, and I'm not saying that this is going to work out well for everybody. So just to be clear, I'm not putting my name on it as like this should happen. I'm just telling you what is happening. The backdrop is that BlackRock, the KKRs, they've invested in iCapital. iCapital is invested in GeoWealth, which is a TAMP company that allows RIAs to enable smaller investments in private equity. And now they've just acquired or invested in, but basically acquired tangible markets, which now allows secondary liquidity, something that didn't exist. So they are setting this up. It's going to be probably semi-liquid and interval funds to begin with, but they are setting this up to create a fully liquid marketplace around iCapital's distribution of private funds directly to registered investment advisors, mostly qualified purchaser accredited only, but through TAMP, GeoWealth, and through your retirement account, retail will have access to this. They just won't be able to hand pick it. They won't be able to choose when to sell. It will be your agent, your advisor, who will choose that for you. But the bottom line here is, in 4 months, we went from zero to hero, and it's all right there. Now, whether or not it all plays out or works out is a different thing. But like, we started this podcast a couple months ago, and this you wouldn't have bet your life that one of these 5 things would have happened, let alone all of them. It's just incredible. The pace is incredible.
Yeah. And for anyone who's wondering, like, hey, why are we talking so much about some of this other private market stuff that's maybe not specifically online private markets? But I want to pull up a quick chart because I saw this. This is a chart that Morningstar PitchBook put out, where it shows the evolving composition of U.S. equities markets. So go back to the year 2000. Equities in the private market as a percent of overall U.S. equities market was such a small percentage that you probably could get exposure to kind of quote the overall U.S. equities markets by mostly investing in public. But as you can see, every 10 years, 5 years, we're coming up on almost 10% now, right? Coming up on that, and as of 2025, being in the private market. And so I think, as an investor, if you put your investor cap on, it's like, if I want true exposure to US equities, I might not just be able to invest in public market ETFs like you used to, back in the 2000s. You do need to start figuring out, are there ways I could potentially get exposure? Not investment advice, right? But my own personal perspective is like, how do I get exposure to some of the private markets now that it is becoming a bigger and bigger portion of the overall equities markets? And does this trend continue? What does this look like if you extrapolate that out 2030, 2040 and beyond? It becomes a much more sizable chunk. So, well, I think,
Brian, I will pile onto that. You said, why are we talking about this? This is why. This trend continues beyond just private equity. Venture capital firms like Sequoia and GC and Andreessen Horowitz are all converting to RIAs and all investing outside of just traditional venture and high net worth. So it is, in my opinion, not a question of if, but rather when a portion of if you're direct true retail, it's going to be through retirement for now. If you're accredited /QP, it is going to be at your request. You will be able to invest in the next Sequoia fund, Andreessen fund, GC fund, and other things that they do because they're becoming a registered investment advisor. No different than any private fund, BlackRock, KKR, that we are talking about on the show. So when we're talking about online private investing, all of this is going to be online, all of it. This is all the pipelines and plumbing that's required to make it possible. So it's just a matter of maybe a year or two before some of the deal flow we're talking about is not just investing in individual deals, crowdfunding, and then being placed on Kingscrowd. These are going to be entire funds that will be made up of hundreds of companies that you will be able to track on Morningstar PitchBook and Kingscrowd, and ultimately you will find a way to get here. And that, I think this is just an apex moment in Brian and I's career, I think, of where everything just flipped and the blurred lines just kind of cleared. And now we're looking at it going, where is everything going? And I think this is the podcast to listen to if you're trying to stay ahead of the curve.
Absolutely.
Self-promotion.
Well, let's move on to our next topic, Scott. Now, Investment Crowdfunding Week, as we mentioned, 4-day virtual event, free, coming up at the end of September. You had a discussion in a chat with Mark Elenowitz from Digital Offering. Why don't you give us just a quick intro in terms of the discussion, who Mark is, what Digital Offering is, and then we're going to play a quick clip of one of the points that you were talking about.
Yeah, Mark is a senior leader at Digital Offering. He was one of the people who brought in the Newsmax deal, among many others. I think there's rumors of LA Times and a handful of other deals that they're trying to come through with. I had no idea how prolific they were, because if you go to their website, it's I'm expecting an ad for West Wing to come on next. Like, it's so old school. But they have brought hundreds and hundreds of millions, billions of dollars into direct offerings. And I think that they are, yeah, look at that puppy. They are in a really interesting spot where they're basically saying, hey, if IPOs are going to take longer, more high quality companies will consider going semi-public early. And I say semi-public, I'm going to circle back. The highlight of my podcast interview with him was him getting pissed at me for calling it a mini-IPO. And he's like, you're going to call it a semi-IPO because mini-IPO, we at Digital Offering have brought in on aggregate more new capital for companies in their mini-IPOs than actual traditional IPOs have been returning. On average, per him, it's somewhere in the vicinity of $15 to $25 million being brought into these companies in their IPOs. And through his semi-IPO, they brought in somewhere in the vicinity of $300 million on Newsmax, which you can say whatever about Newsmax and say whatever about how they went about it. They IPO'd at $10. There was intraday trading that went crazy, $287. When I checked yesterday or 2 days ago on the podcast, it was at $14.75. So last time I checked, everyone made money. The only people who got locked up on that were the same people as anyone who held common shares. And he talks a little bit about that, which is worth listening to the show as he discussed, I think the nuance of if you come into a deal through crowdfunding and then end up in a public company. That's a topic that Brian and I have talked about on this show several times. 12:54, so they're not doing as well just today. But but either way, I think I think you're going to see a lot of companies that are similar to Digital Offering spring up. There's one in Chicago called Regiment. There's a handful of others that I think are going to come in where they're basically taking the direct IPO, and instead of taking it all the way public, you're kind of going semi-public and allowing investors, and in some cases retail, and then retail to accredited, and then generally through an IPO. It's a pathway I think a lot of businesses are going to take and are going to be forced to take because capital, if the private funds and markets are made up of, like you said a minute ago, 10%, eventually 20% of retail capital, it sort of makes it like, might as well just go public this way, Yeah. And so I think we talked a little bit about that. In general, I think Digital Offering is a really interesting business that I did not know a whole lot about.
Let's play this clip real quick, and then we can jump in and discuss.
Well, this is taking crowdfunding and supersizing it and giving an exit. Like I said, at the beginning, it was charitable donation.
But this is legitimate.
Charitable donations suddenly become liquid events. But the challenges that we still have and what we're trying to overcome is, you're right, institutions, like, we didn't allow many institutions into the Newsmax deal. In fact, very few. But after Newsmax, every institution we work with on the street is begging to be in our next deal. And that, as a banker, comes with responsibility, because if you bring in the institution, I'm basically doing away with my motto, which is democratizing and allowing retail investors access to institutional quality product. If I give it to the institution, I've gone back to the old way of doing things where institutions get the best fills and retail gets the worst. I'm not going to allow that to happen because they're the first ones to sell out. When you bring the crowd and you bring 30,000 passionate investors that buy $500 to $1,500 to $2,000, they're not buying it for the IPO flip, they're buying it to build a business. Right. So the entrepreneur wants that investor because that's the investor that's going to give them a chance to execute. People forget when you go public, you're just getting started. We just raised you the capital to execute your business.
Well, that's how it had been and was supposed to be. It's tech kind of took a dunk on that. I mean, you talk to the Collison brothers who will tell you that their time to go public, there's obviously everyone says bullshit, so we'll see how it goes. But they've always stuck to when we feel like we've done as much as a founder-led business, that's when we want to go public, where it's no longer, there's bigger professionals to come in, the Travis Kalanick type of stuff. Like that's the wrong way to go about it. It's greedy, it works for them, but it's not the right way to go about it. To your point, it should be the beginning. This is where you've got the capital infusion and all eyes on me, and people know your brand, and you're not just a quiet private company kind of stealthily moving around. Like, you should be a real player. So I totally agree with you on that.
Yeah, and also I think the other thing that, and everybody in our industry says this, the beauty of Reg A is you get two bites at the apple. You're not only creating visibility for your stock and for the company, but also for the product and the brand.
Now, Scott, I know, again, teaser for everyone, Mark Elenowitz is going to be on one of the panel sessions at the upcoming investment crowdfunding week. So definitely head over to kingscrowd.com/ICW25, sign up. We'll be getting a deeper dive. But with our last few minutes here, any other takeaways just in terms of, did Mark share anything that kind of changed how you thought about Reg A, other than you mentioned the mini-IPO, right? It's not as mini maybe perhaps in terms of the capital being raised, but anything else?
No, not really. I mean, I think what he outlined in the show, and I'll share the show later on here in this week or next week. But like what he outlined was just a more direct path to raising capital, and that there's probably going to be a near future where higher quality companies go direct to retail. And as the lines continue to blur per the conversation we've had for the last 20 minutes, where private and public capital is all sort of coming from the same pot, I just think you're going to see things just a little bit easier to access. The private markets will only be private in the sense that they're not fully public yet. But then we have the Nasdaq approved tokenization trading, in which case, if these assets are tokenized and things like X stocks are up, everything is tradable, in which case nothing is private, everything is public-private, everything's semi-private, public, whatever. So I think we're just heading into this world. And last thing, and I know you have to wrap, Vlad was from Robinhood was at the Hood Summit saying that in the next year, he will be a bank and banking services, and he even named iCapital as a partner to enable the managed investment services wing of Robinhood to allow any retail investor to participate in private market stuff. So if that's the case, and then it's tokenized, you're trading day and night, crypto, private, public, equities, ETFs, futures. Fuck, man, you're buying trades on the Bears game on Robinhood right now. Predictive markets, not a joke. Everything's right there. And by the way, the stock is up 21% this week. Anyone who got in at $19 at the IPO is sitting pretty at 120.87. So way to go, Vlad.
The inclusion of Robinhood into the S&P, which a lot of people think can often help with stock's price based on, the ETFs and other things that have to pick it up for index balancing. So again, just for everyone watching, so this session with Reg A and Mark Elenowitz, it's going to be uplisting to IPO, the growing path to going public. It will be on Thursday, October 2nd, with Scott here, Mark, and also Chris Lustrino, founder and CEO of Kingscrowd, at 4 p.m. So lots of other great sessions that we're going to be doing there. Make sure you head over and check out the page, the speakers, sign up. Again, it's completely free. You can register. If you're a founder, check out some of the founder events that you want to attend. If you're an investor, watch some of the fireside sessions, some of the pitches. It's a lot of great programming, and I really think it is the who's who of the industry that are all going to be in one place. Well, thank you everyone for tuning in, and we'll be back here next week with more Kingscrowd podcasts. See you next time.